guys, welcome back to my channel. In today's video, I'm going to go through my trading recap for the week of December 7th. So that week I traded 4 days. Yes, I traded 4 days out of that week and I made around $33,000 for the entire week. I will go through most of my trades because throughout the week I only took about on average 2 to 3 trades a day. So I'll go through most of the trades that I took that week so you guys can kind of see exactly what trades I took. Also, before you get started, don't forget to hit that like button if you want to see more videos, and also go ahead and turn on those post notifications so you don't miss a video when it does get posted. And yeah, let's go ahead and get started. Alright guys, so like I said, I'm going to go through my trades from the week of the 7th to the 11th of December. On the 7th, I traded Tesla and Netflix and I made about $13,160. So I'm going to go through a couple of my trades on that day for you guys. So let's go ahead and start with Tesla. So Tesla, since they announced that they were going to get included in the S&P 500 on December 21st, I have had them on my watch list consistently. So let's go through how I traded Tesla on the 7th. So on the 7th, this is the day of the 7th. So this is Tesla on the 7th. This is the 1 minute time frame and this is the 5 minute time frame on Tesla. I watched both, so I'm going to go through both side by side so you can see. So if we're watching Tesla on the 7th, so this is all pre-market here. Whenever I chart, I always make sure I chart my pre-market line. So if I'm going to chart Tesla, the first line that I would chart is my pre-market resistance. So I would chart my pre-market level at 507.50, and then I've already charted my pre-market low at 600. So those are the levels that I'm going to be watching on Tesla. So if it below 600 for puts, above 607.50 for calls on the upside. Now you can see that in the morning Tesla did push through that resistance of 607.50 and went on an uptrend here throughout the day. Alright, so the first trade that I took on Tesla was at 10:15 and I exited it at 1:32. So it was a day trade on Tesla. So I'll go through how I day traded it. So I missed most of this right here on Tesla here. It did push up here and then create a bull flag. So how you could play this bull flag, so this right here is what I call a bull flag. Oops. I usually like to spot bull flags on the 5 minute and 15 minute time frames. They're easier to spot. Oops. So how you would play a bull flag is the break of the bull flag, so you can enter on this candle, or on the 1 minute you can enter on this candle and hold to your next resistance. My first trade on Tesla was a bounce play off of the EMA and the support levels, and then I held it for a day trade. So this is your 10:15 candle on the 1 minute time frame, and this is your 10:15 candle on the 5 minute time frame. So you can see that Tesla bounced off of the 9-day EMA. So you can see it broke out of this 619.50 level and then pulled back to retest that level. So what you're looking for here is you're looking for Tesla to hold this 619.50 level if it's going to retest. If it's going to reverse, it usually breaks down below that level and starts into a downtrend. However, you can see that this is a strong pullback, strong retest. Volume dies down on it, so you know it's a pullback and not a reversal. There's not high volume on it. So Tesla pulls back here. Now what I'm looking for is a bounce play on Tesla. So I want to see Tesla bounce and pull through this 9-day EMA to continue its uptrend. And it does. It pulls through the 9-day EMA. I enter at 10:15 here. And after that, what I'm looking for is for it to hold through this 9-day EMA all the way up. And then same thing on the 5 minute time frame. It holds the 9-day EMA all the way up. And I know a lot of you would probably get shaken out. I'm just going to zoom in. So I know it's a little bit difficult to hold through these 1 minute candles here. A lot of people get shaken out on red 1 minute candles. That's why I like to watch it on the 5 minute as well. And that's why I like to use my EMAs as trend line support. So that's how I utilize my EMAs as support and resistance levels, and to determine if the trend is going to continue. So a break below the 21-day EMA means the stock could potentially start a downtrend, and then a break above the 9-day EMA could potentially signify that the stock is going to start an uptrend. So you can see here that Tesla is holding the 9-day EMA fairly strongly, so there's no reason for you to get out. And now if you zoom up, like I said, I held this trade for pretty much the majority of the day. Like I said, I entered around 10:15 and I exited around 1:30 for a day trade on Tesla, and I'll zoom in and I'll show you exactly where I entered. But I want to show you exactly why I held through this consolidation and why I didn't get shaken out. So you can see on the 1 minute time frame, it does hold that 9-day EMA, but then right around here, it starts to consolidate. So now what I'm looking for, if I want to get out of this trade, I'm looking for a break of this 625 level. So you can see that Tesla is kind of holding the support area of 625. It's kind of bouncing off on and off of it. It's not holding fully below that 625 level. Neither candle is opening fully below that 625 level. So I'm comfortable holding Tesla. If it breaks 625, I'm going to lock my profit and get out. So as Tesla continues to move, right here it starts to create a bull pennant, okay? And you can see this more clearly on the 15-minute time frame, which I'm going to show you. So this is a 15-minute time frame. So Tesla pushes up. This is your flagpole here, and then once it creates that flagpole for the bull pennant, it creates a pennant shape here. So now I'm pretty confident that Tesla is going to break out of this bull pennant. Same thing on the 1 minute here. You can see it a lot more clearly on the 5-minute and 15-minute. So I hold Tesla all the way through. I'm comfortable with holding it. And now that I see this bull pennant on the 15-minute, I'm not going to pay too much attention to the 1 minute. I'm going to pay more attention to the 15-minute and 5-minute time frames, because that's where I found the pattern on. I didn't necessarily see the pattern on the 1 minute. I saw it on the 5 and 15-minute, which made me want to hold the trade longer and hold it for a longer day trade. Now if we go back to the 5-minute, show you exactly where I exited. So as Tesla breaks out of this bull pennant, I'm still holding, and then right around here it pulls back to the 9-day EMA. Now my exit wasn't the best exit on here because Tesla ended up continuing up and I could have caught this entire move. So I'll show you exactly where I exited and why it kind of messed me up. So on this play on Tesla, I entered my contracts at $20.20 and I exited them when the contracts went to $26. So I exited at 132 right here. So I did it right here at 132. So my target on Tesla was around the 645 level. So I like to set targets for my day trades, just like you want to set targets for scalps or swings, whatever your target is. My target for this day trade was 635, and Tesla was approaching that 635 level. So I entered, like I said, at 10:15. I exited at 132, this candle right here, because it was approaching that 635 level, and I felt comfortable getting out. On the 5-minute time frame, however, this 132 candle was still pushing, so it wasn't the best exit point, because on the 5-minute time frame, if I'm continuously watching on the 5-minute, it pulled back and it held the 9-day EMA and continued its uptrend. If you were to exit, I would have exited somewhere around here where it does break below the 9-day EMA. However, I was comfortable with the profit I had made. I made a little bit over a 30% profit on this day trade here, so I was comfortable locking it in. Plus, it hit my profit target. So what you could have done is locked in some, but I like to go all in and all out. And I locked in all my profit here at around the 635 level. So like I said, 132 was my exit, 10:15 was my entry, held it for a day trade, and made about a little bit over a 30% profit on this trade on Tesla. There's multiple things that helped me hold this trade. One, there was a catalyst behind Tesla, the S&P inclusion. There was a lot of news that was consistently coming out on Tesla. On top of that, as I was holding, we see a pattern formation here, a bullish pattern formation. It's holding my EMAs. Multiple reasons why I should hold the trade. Alright guys, so that was one of my trades on Tesla on the 7th. I'm going to go to the 8th now, and on the 8th I only traded snow, and I only traded snow on the upside. So I'm going to go ahead and show you guys, and I'm actually going to zoom. I'm going to go to actually one day before, so you guys can see how I charted and etc. So I traded snow a couple times on this day, so I'm going to go through some of the trades with you guys. So if some of you don't know, snow is a recent IPO. There's a lot of hype around it, a lot of momentum around it, and a lot of trading volume around it. So that's why I've been watching snow pretty consistently on my watch list. Plus, I really like its price action. It's easy to read, and the premiums do move a little bit faster, so you gain a little bit more profit on trades like this. So if I'm watching snow in the morning, I decide that I want to put snow on my catalyst, on my watch list. So these are the levels that I'm going to watch. So this is the after hours here. This is the 7th here, what was going on in the 7th, and this is pre-market and after hours. So I'm going to go ahead and chart this pre-market low, and you can see here it was a low on the 7th. I'm going to zoom in here for you guys. So I'm going to chart my pre-market low. So you can see this is all pre-market, after hours stuff, and this is the day before, so this is 7. So you can see this level right here, 380. I'm gonna actually chart 384. So it's 384 level. You can see it bounced multiple times, and even in the pre-market it's not able to break below that 384 level. So I'm going to watch SNO in the morning below 384, and then above this pre-market high, which I'm going to chart at 391. So I'm not going to chart the top of the wick. I usually just chart 391. I usually chart right at the base of the candle, especially if it wicks up. So I'm going to chart 391. This needs to move a little bit. All right, 391. So now what I'm doing, I want to watch SNO above 391 for calls on the upside, and then below 384 for puts on the downside. And then my next level, obviously on SNO, is your next level of resistance here, which was the 12.7 resistance, and you can see right here I created a level of resistance, 397. So if SNO breaks 391, I have a couple levels of resistance here. So my next level would be 390, 350 here, 390, 350, and then 397 would be my next level of resistance potentially. So I'm going to zoom back out, and you can see here SNO opened in the morning. We're going to see what it was doing. So I'm going to zoom in. So you can see it broke the first level of resistance, broke the second level of resistance, and then right here at this 397 level, it starts to really start its uptrend. So I waited until the 397 level just because it's a stronger level to me, and there was multiple levels back to back, this $2 level and then a $4 level, and SNO moves in pretty decently sized increments. So I wanted to wait until I saw a really solid break of a solid resistance level, which was my 397 level. All right, so on my first trade on SNO, I did FOMO a little bit, but I'll show you exactly how I was able to hold through that. So I missed the 397 break on SNO, which I was really bummed out about that I missed it, because it was a nice break here. You could have entered on either of these two candles, so your 939 or 940 candle. I missed this entire move, so I FOMO'd in and I entered at 942. Now this could have gone extremely wrong, but let me show you exactly how I was able to hold from 942 until 945. So when I entered at 942, you can see that the stock starts to slightly pull back on that 942 candle, not too much, but it does have a doji candle here, so there's a little bit of indecision between buyers and sellers, and you can see that the volume was pretty high on that doji candle. So I still held it because it wasn't a bearish candle. Like I said, doji candles usually signify indecision between buyers and sellers, and SNO still had a lot of momentum behind it on the upside, so I felt comfortable holding through this candle. It was a really, really bad entry. The candle opened green, so I thought it was going to continue its uptrend. However, it didn't. Like I said, it pulled back just slightly here. When the stock pulls back, I'm comfortable with holding it. Like I said, because it's a doji candle, it signifies indecision. It's not necessarily a bearish candle, and the stock is still holding really high above the 9-day EMA. And on your 5-minute time frame, you can see that this 940 to 945 candle is a strong bullish candle. So this candle actually helped me hold through this little pullback right here, and why I didn't let it go. I ended up getting out of SNO on this trade at 945. So I exited SNO on this candle right here, on the open of this candle, and on the open of the 5-minute candle. The 5-minute candle opened red as well, and so did that 1-minute candle. Plus the stock did move up, had a strong move up here, moved up $4 or $5, so it's comfortable getting out of this push up. So if the stock did reverse on me, my stop loss would be at 404 and below the 9-day EMA. That would be my stop loss on this trade if it did reverse. However, the reason I showed you guys this trade is because I want to show you that even the most experienced traders FOMO into stocks, but as long as you have a set exit point where you have a strong stop loss, you know where you're going to exit for, and you pay attention and you don't let it make you nervous or give you anxiety, and you really just pay attention to what the chart is telling you and the stock is telling you, you can make a profit out of it instead of getting shaken out here, entering and then exiting right at this candle or this 943 candle. I held through. I paid attention to what the rest of the charts were telling me, obviously paying attention to time and sales and level 2 and what they're telling me as well. And then once you have all of that information, then you want to make your decision. Don't just get into this candle, see that it turns into a doji candle or a red candle and get shaken out the next candle. you want to make sure that you're paying attention to what everything else is telling you, and you want to make sure that your emotions are not controlling your trade. Obviously on this trade I had a mix of emotions here. I FOMO'd in, like I said. However, I was able to reel myself back in and make a profit out of this trade instead of getting shaken out here. Make sure that if your emotions do kick in at some point in your trading throughout the day, or you FOMO into a stock, make sure that you reel yourself back in and you actually pay attention to what the charts are telling you, and you pay attention to your strategy and have your stop loss in place, and you'll end up making a profit on it. Alright guys, so I didn't trade on the 9th, but I did trade on the 10th, and I took one trade on the 10th, and that was with Tesla. So I'll go ahead and show you guys how I traded Tesla and what I did. So alright, so as you can see, I have a lot of levels here on Tesla. Like I said, Tesla was on my watch up until obviously the S&P inclusion for Tesla, so was consistently on my watch, and I actually day traded Tesla. So I'm going to show you on mostly the 5-minute time frame how I day traded it and what my targets were on Tesla. So my first break was obviously this 585 break on Tesla. The 585 break was the pre-market level, and if it broke that pre-market level, that would be my entry on Tesla. So obviously you can see here on Tesla I have my support pre-market and my support my support pre-market and my resistance. So if Tesla drops below this 570 level, probably 565 honestly, because of this low here, I would buy puts. And then on the upside, my 585 level is the strong level on Tesla on the upside, and I would buy calls. You can see here that Tesla did break that 585 level. Now, because Tesla had a strong catalyst behind it, I was able to hold this for a day trade. That was my plan for the trade, and I entered at 9:39 and I held until 9:59. So it was about a 20-minute day trade on Tesla. So my target on this trade was around the 600 to 605 level. I knew that the 600 level was a strong level of resistance on Tesla, as well as that 605 level. So those are my target exits for this trade. So I entered this trade at 9:39. So I entered right at the break of the 585 level. So I entered right here. So you can see this was my you could have entered at this 938 candle as well, because it did hold fully above the 585 level. So this could be your entry candle. I got filled on this trade. I got filled on this trade a little bit late, so I ended at 939, and the stock was continuously on an uptrend. Now, like I said, I exited at 959, so I exited right around that 605 level. So this is what I mean when you guys need to have a plan behind every trade that you take. If you have a plan and you follow through with your plan, there's really no reason, besides obviously adverse events happening in the market, that your trade shouldn't work out. If you have a plan before it, if you have a strategy that has been tested, you should be able to follow through with your plan, follow through with your strategy, and make profitable trades. So like I said, I entered at 9:39. I entered on the 1-minute time frame, and then I started watching Tesla on the 5-minute time frame, because obviously if you watch it on the 1 minute, you're gonna get shaken out. So you want to watch it on a higher time frame. On the 1 minute, all I'm paying attention to is for Tesla to hold my 9-day EMA, and on the 5-minute time frame, I'm just watching how the candles are forming. And you can see you're getting strong bullish candles. We have a little bit of a doji candle here, but it's a volume started to kind of pull back on that candle, so I'm not really too concerned. And then you could also see, so this was the 9:45 candle, and around 9:45 right here you can see it pulled back. It was still holding my 9-day EMA. So this is why multi-time frame analysis is so important, because what you see on the 1-minute time frame and what you see on the 5-minute time frame can really, if you put the two together, can really help you identify what's going to happen with the trend of the stock. Now, like I said, on the 1-minute time frame, I'm paying attention to how it's holding the 9-day EMA, and the 5-minute time frame on a day trade, I'm paying attention to how the candles are forming. I exited this trade at 10:59. Like I said, my target on this trade, my profit target, was at 605. This 9:59 candle broke the 605 level. That was my target. The next level that I had on Tesla was 607.50. I did see some sellers on level 2 sitting at that level. Like I said, my target profit was 605. The stock went to 607.50. I didn't want to risk any more of my profit on this day trade, and I locked it at 9:59. And what does the stock do? It does pull back all the way down, which if I would have been in this trade, this pullback might have taken a lot of my profit, which is good. I followed my profit target, took my target where I had originally intended to take my target. I didn't get greedy on this trade, and I exited at the 10:59 candle. This is a 20-minute trade here, 20-minute day trade. So when I entered at 9:39, the contracts that I had bought were $17.80, and when I exited at 9:59, the contracts had gone to $27.90. So I made a little over a 50% profit on this day trade. So this was probably one of the best trades I've taken all month. I had a solid plan. I followed through with the plan, and I locked in the most profit right at the top of the trade. Like I said, a little bit over a 50% profit on this day trade on Tesla. Guys, so the next day was 12/11, and I was watching Disney. So Disney had a catalyst behind it, so I put it on my watch list, and as you can see, Disney was on an uptrend for that day. So you can see that Disney was at all-time highs, so I did miss a lot of the move here on Disney. However, if you push, if I come in here, so my entry on Disney, so like I said, I took one trade on Disney. Two trades on Disney. This was one of them that I took, and I entered at 11:08 and I exited at 11:12. So my entry was at 11:08, so I entered right here off of the bounce of the 9-day EMA. So because I'm watching Disney here and it's at all-time highs, it's not making significant breakouts, but it's on a strong uptrend. What I like to watch is the bounce off of the EMA levels. So that is what I technically play. So if I see, for example, a stock pull back to the EMA and then push up, I'm getting that bounce off the EMA when it starts to push up. And usually you'll see volume die on the pullback. So you can see here, stock pushes up, pulls back to the 9-day EMA. What happens to volume? Volume dips. And when you see volume create that U shape right here and start to pick back up, it signifies that the stock did pull back. It wasn't a reversal, and the stock's going to continue its uptrend. So you can see stock pull back to the 9-day EMA, volume dips into a U shape, picks back up on the next candle. I enter at 11:08 off of the bounce of the 9-day EMA. Stock pushes up on high volume, and I exit at 11:12 on this candle right here. I didn't like how much volume these two candles had. I wanted to exit at 11:11, however my order would not fill, so I exited at 11:12. When I entered this trade, the premium was $1.62, and when I exited the trade, the premium was $2.19, and I made about a $1,400 profit on this trade on Disney. On the day on Disney, I made about around $3,500 on Disney for the day. Like I said, I only traded Disney twice, and that was it. And those are my trades for the week. Like I said, they weren't all of my trades. I did trade some other stocks, but on average throughout the week of the 7th, I took about probably 3 to 4 trades per day on average, sometimes even less. Like today, like on this day, I only took 2 trades. So you don't need to necessarily trade too much. You really just need to pay attention, be patient. I was really patient on Disney here. You can see that I missed a lot of the play, but I was still patient. Disney was still on an uptrend, and I found a significant move that I was able to take, a significant scalp that I was able to take. Obviously, there was more moves, but I didn't want to risk it. The overall market was really choppy on this day, and there wasn't a lot of moves. Disney was one of the only stocks that was moving, and I personally don't trade Disney that often, so I wasn't too comfortable with trading the stock. So I wanted to make sure that I was extremely patient, caught a good move, and was able to implement a strategy that I was familiar with in order to take a trade on that stock. So whenever you're not comfortable with the stock, you want to make sure you've at least traded it once or twice. Chart the stock and make sure that you're extremely patient with the stock throughout the day, and you find one significant move that applies that you can apply your strategy to and make a profit on that trade. But you need to have that patience behind that trade, or it's not going to work out. Alright guys, so that's it for this week's video. Thank you so much for watching. If you have any questions, go ahead and comment down below or shoot me a DM on Instagram and I'll make sure to respond. And yeah, I'll catch you all in next week's video. Bye!